The VA doesn't have a minimum credit score for VA loans. So why does everyone say 620? Great question, and you're not alone. This is probably the most common question that I get from military families getting ready to buy their first home. But here's exactly what you need to do to qualify for a VA loan in 2026. I'm going to walk you through the complete checklist, service requirements, credit standards, income verification, and property eligibility. So that way you know exactly where you stand before you ever even call a lender. And here's the most important part though. By the end of this video, you're going to have a clear yes or no answer whether or not you qualify for a VA loan. And if it's not a yes yet, I'm going to show you exactly what to do to fix it. I'm Weldon Hobbs. I'm a military relocation professional with Team Hobbs Realty right here in Colorado Springs, but I work with loan officers who are licensed in multiple states and who specialize in VA loans for military families. This is the same qualification framework that we use with every client who calls us. But there is an important caveat here. I am not a loan officer, so your specific lender may have additional requirements beyond what we're covering today, but this is the heavy lift. These are the big four categories that you need to understand. So with that, let's break it down. So the first requirement, you need to prove that you're eligible for a VA loan benefit. This is called your certificate of eligibility. The VA, they set minimum service requirements, and they're different depending on how and when you served. So let's break down the most common scenarios. If you're active duty right now, you need 90 consecutive days of service during wartime. And if you serve during peacetime, it's 181 days, 6 months or so. If you're a veteran who's already separated, same time frames apply. 90 days wartime, 181 peacetime. For reserves and National Guard members, you need 6 years of service, and here's the key to it though. Your discharge has to be honorable or general under honorable conditions. If you're not sure what your discharge status is, check your DD-214. That's the document that you're going to need anyway, so might as well get your hands on it now. There's also eligibility for surviving spouses of service members who died in the line of duty or from a service-connected disability. If that's your situation, you qualify. So how do you prove this? You apply for your certificate of eligibility. You can do this online through the VA's e-benefits portal, or your lender, they can pull it for you as well. And most do this automatically when you start the pre-approval process. You'll definitely need your DD-214 if you've separated or retired, or your current active duty status if you're still serving. The process takes about 5 to 10 minutes online, and you'll get your COE instantly in most cases. If you meet these service requirements, that's the first box to check. Let's talk credit score requirements, because there's plenty of confusion in this area. And why it gets confusing is because the VA itself doesn't set a minimum credit score requirement. Think about that. It's the lending institutions. They're the ones that have the minimum credit score requirement. So when you see articles saying 620 or 640, those are lender requirements, not VA requirements. Most lenders, they set their minimum around 620, but here's what you need to know. Lower credit scores, that equals higher interest rates. If you've got a 620, you can probably get approved, but you're going to pay more in interest over the life of the loan compared to someone with a 720 score. Now, anything I'm saying right now, don't let that stop you from pursuing a VA loan. There may be special programs that allow for that lower score. But here's my practical recommendation. If you're below 640, work on building your credit before you buy. Even bumping from a 640 to a 680, that can save you thousands over the 30 years that you have that mortgage. If your credit score isn't great, but you've got other factors that are strong, lenders call these compensating factors, and so that could also help. Maybe you've got a low credit score, but you have a steady income, minimal debt, and a solid down payment saved. Or maybe your credit took a hit during a deployment or a divorce, something specific that's explainable. These things matter and they affect your interest rate. So a good loan officer who specializes in VA loans, they're going to know how to present compensating factors to underwriters. And that's why working with someone experienced in military lending, why that matters. Ultimately though, here's what lenders are really looking at. It's payment history. Have you paid bills on time, consistently, over the last 12 to 24 months? That matters more than one missed payment 3 years ago. They're also looking at your debt to income ratio, how much debt you carry compared to your income, and your credit utilization. So how much of your available credit that you have what are you actually using against it? Here's a tip though. If you are carrying high balances on your credit cards, pay those down before you apply. Getting your utilization under 30% helps your score and your approval chances. Income and employment. And this is where the VA has some unique requirements that can catch people off guard. The qualification for VA loans, it involves two main calculations, and that's going to be your debt to income ratio and then something called residual income. Let's start with DTI, again, debt to income ratio, because that's what most people are familiar with and they know. This is your total monthly debt divided by your gross monthly income. Now, debt does not mean your cell phone bill. You could get rid of that and it doesn't count as a debt. It's more your fixed debt, your credit card or car payment, house loan. That's what we're talking about here, things that you've taken loans out for. So let's just say your new house payment would be $2,000 a month. That includes principal, interest, taxes, insurance, and potentially homeowner association if there is one. You've got a car that's also $400 a month and then a student loan payment at $200 a month. That is $2,600 total monthly debt. And if your gross monthly income is $6,000, your DTI, debt to income ratio, is $2,600 divided by $6,000. That is 43%. Most VA lenders want to see your DTI at 41% or lower. Some will go up to 45 or even 50 with strong compensating factors, but 41 is the standard target. Now, here's the VA specific part that tripped people up: residual income. Residual income is the money that you have left over after paying all your debts and your estimated living expenses. The VA sets minimums based on your family size and where you're buying. Why does this even matter? I'm with you. But the VA wants to make sure that you're not house poor. You could technically have a 41% DTI and still qualify. But if you don't have enough money left over for groceries, gas, and daily life, you won't meet the residual income requirement. Let's use Colorado Springs as an example. If you're a family of 4 in the West region, which includes Colorado, you need about $1,218 in residual income. That means after your mortgage, car payments, student loans, credit cards, everything we just talked about, and then the estimated utilities and maintenance costs, you need $1,218 left over every month. If the math doesn't work, you won't qualify, even if your credit score is perfect. To me, this is actually a good thing. The VA is trying to protect you from buying a house you can't afford to live in. Now, what income counts? Your base pay, your BAH, your BAS, that all counts. And if you get hazard pay or other special pays, those can count too if they're consistent and documented. And if you're transitioning out and starting a new job, lenders, they want to see at least 30 days of pay stubs, sometimes 60. So if you're self-employed after separating, they're going to want to see 2 years of tax returns, which means you're probably waiting a little bit before you can qualify. This was my exact situation as I went into real estate. My wife and I, we were not moving for another 2 years until I could demonstrate that I had steady income being generated from our self-employment status. If you're buying while you're still on active duty, it's pretty straightforward. Again, if you're transitioning though, talk to your lender about your timing, and you might need to wait until you've got a couple of months of civilian pay stubs in order to actually qualify if you were moving to a new town. But again, proactive, talking up front, that's what matters. Now, let's talk about the property itself, because not every property qualifies for a VA loan. Property you're buying has to meet VA minimum property requirements. This is about safety and livability. The VA does not want you buying a house that needs major repairs. During the inspection and appraisal process, the VA appraiser, they are looking for things like a safe roof, functioning HVAC, no foundation issues, working plumbing and electrical. They are looking for minimum safety and livability standards. And that's important. They don't want you to buy into something that you're going to have to throw a lot of money back into just to make it livable. If something major is wrong, the seller has to fix it or the deal, it's not going to close. Though sometimes this does mean you can't buy a fixer-upper with a VA loan. If a house needs a new roof or has termite damage, you're probably not getting VA approval until those things are fixed, but there are ways to optimize that. Now, what types of properties qualify? Single-family homes? Yes. Condos? Yes, but only if the HOA is VA approved, and more on that in a second. Townhomes? Yes. Multi-unit properties up to 4 units or 4 doors? Yes, as long as you're living in one of the units. What does not qualify? Well, investment properties don't, where you're not living in there. Co-op properties that need major structural work, that's not likely going to happen either. But let's focus back on condos for a second, because this trips people up. If you want to buy a condo with a VA loan, the HOA has to be on the VA's approved list. You can check this online before you even make an offer. And if the HOA isn't approved, you can ask the seller or the HOA to apply for approval, but that takes time, as you can imagine. Just don't count on closing in 30 days if you're waiting on the VA condo approval. Now, the occupancy requirement. You have to live in the home as your primary residence. The VA, they require you to move in within 60 days of closing and live there for at least 1 year. You can't buy a house with a VA loan and then rent it out from day one. That violates the terms of the loan, and it's just not the intent of it. It's meant for as your primary residence. But here's a common question. What if you get orders after you buy? That is completely different. If you're active duty and you get PCS orders, you can move out and rent the property. This is what Kristen and I did during our time on active duty. The 1-year primary residence requirement doesn't apply if military orders force you to relocate. The VA understands that completely, as you can imagine. But you can't plan to buy and immediately rent it out. That's a no-go. That's loan fraud. If you meet all 4, you're good to go. But here's the question that I promised you. What if you don't qualify yet? Let me show you exactly what to fix. If you ran through that checklist and you realize you're not quite there yet, here's the good news. Most qualification issues, they are fixable. If it's a credit score issue, focus on 3 things. Pay every bill on time for the next 6 to 12 months. Pay down your credit card balances below 30% utilization, and don't open new credit accounts. If you've got collections or late payments, consider working with a credit repair service or handling disputes yourself. There are experts for this. Call me if you need them. Even bumping your score from 620 to 660, that can make a huge difference. If it's a debt-to-income issue, you've got 2 options. Increase your income or decrease your debt. Pay off a car loan, pay down your credit cards. If you've got student loans, see if you can get on an income-driven repayment plan that lowers your monthly payment. That helps your debt-to-income ratio. On the income side, if you are transitioning, getting out, get that civilian job lined up early so that way you've got pay stubs ready when you want to buy. And if it's a property issue, the 4th category, you found a house that you love, but it doesn't meet VA standards. You can ask the seller to make repairs or you keep looking. Bottom line though, if you don't qualify today, you can probably qualify in 6 months to a year if you take the right steps. Talk to a VA loan specialist about your specific situation. They'll give you the roadmap that you need to be successful. We covered a lot today with the VA loan requirements themselves. And again, it comes down to 4 categories. Service requirements, get your COE, your certificate of eligibility. Credit requirements. Lenders set minimums, not the VA, and lower scores means higher interest rates. Income requirements, the debt-to-income ratio and residual income, those things both matter. And then property requirements, it has to be move-in ready and you have to live there. If you meet all 4 of those, you're ready to start looking. And if you don't, now you know exactly what to fix. If you're in Colorado Springs or anywhere around the country and you want help navigating this process, work with loan officers who specialize in VA loans and who are licensed in multiple states. Give me a call. I'm happy to talk through this with you, or check out the caption below and it'll have a link to my calendar. We'll talk for 30 minutes. We'll optimize your situation, figure out the best way for you to go, and make sure that you are set up for success. So that way you can make that confident decision to move forward. We'll walk through your specific situation, run your numbers, and connect you with the right lender for your circumstances. Where do I find a good VA loan lender? Because not all lenders are the same when it comes to VA loans. Some specialize in military families and understand the nuances. Others treat VA loans like any other mortgage and miss opportunities to save you money. I break down exactly how to choose the right VA lender in my next video, Best VA Loan Lenders for 2026. I covered that question and more, what red flags to watch out for, and how to compare rates and fees so you're not overpaying. Thanks for watching. If this was helpful, hit that like and subscribe button so you don't miss future videos, and I'll see you in the next one.